It's happening! The first APO of the year, NCB Financial Group has finally launched its APO. They're seeking to raise just over 5 billion Jamaican dollars. It's a lot of money. Can they do it? Will they do it? And should you invest? Here's a quick recap of the offer.
NCB Financial Group wants to raise over 5 billion Jamaican dollars through an additional public offer. The company is offering 78.5 million shares for sale. 785,000 shares are reserved for employees. Shares to the public are going for $65 each, while shares from the reserved pool will cost investors $58.50 each. The smallest quantity you can buy is 100 shares, followed by multiples of 10. That means you can participate in this offer for 6,500 Jamaican dollars plus fees. That's about 42 US dollars. The offer is set to open on May 6, 2024 and is scheduled to close on May 27, 2024. You can apply at goipo.jncb.com. The link is in the description.
Now let's hear more from the NCB bosses themselves. Let's welcome Michael Lee Chin, who is the chairman of NCB Financial Group. We also have with us Robert Almeida, who is the CEO of NCB Financial Group, as well as Ian Chinapu, who is the group CEO of Guardian Holdings. Welcome, gentlemen.
Thank you.
Awesome stuff. So first, let's go into what this APO is all about, because we've been hearing about it for some months now, but at the same time, you also have a bond out. So why bond and APO at the same time? I'm not sure who wants to take that first one.
I can take that, Kalila. So we're a pretty, as you said, we're a pretty large organization. You'll see we got $2.2 trillion of assets. So at any point in time, we're typically out in the market, and sometimes the numbers look pretty big, but they're kind of normal course of business for us. So I would say there's nothing, outside of the ordinary in normal course of business for us with the bond out there. The incremental piece is the APO, but there was no reason, given the size of the APO, there really wasn't a reason not to be in the market at the same time.
Okay, well, let's talk about the share price for the APO, because each new share costs $65. And of course, there's a minimum purchase of 100 shares. But when you look at NCB's current stock price, it closed on April 26th at $61.84. So how did you arrive at $65 as the APO price, since usually you would expect a lower price than the current trading price?
There are a couple of things that led to it, right? So if you look at the different considerations, you want to price the APO, you want to price the stock issuance based on what is the value of the company, and yes, a discount to value. But if you were to take a look at our book value, is the stock price issue is lower than the actual book value per share. So it's actually at a price to book of around 1 times book, which is very cheap by market standards, and by our historical, where we've gone as high as 3 times book in the past. In addition, if you go back in time while we were doing the prospectus and preparing the prospectus, the share price was running around $70, and so we priced it at 65 at the time. Last thing I'd just say is that if you were to look at the actual volumes that trade and the volumes in the queue, you couldn't buy very many shares before you bumped over $65 in the queue for demand for the shares. There's not many sellers of the shares below $65 a share. And so there really isn't any demand. There isn't really selling volume in the shares for anybody who wanted to buy shares. They bid the price up over 65 pretty quickly.
So let me bring in Mr. Lee Chin here, because speaking of that stock price, I know that dividends has been a big deal for you in the past year. We had all the headlines. Are you disappointed that the stock price hasn't rallied after you reintroduced dividends last year? By the way, I just got my first NCB dividend check in a while. Literally today I opened it, I saw it in the mail. I'm like, oh, forgot about this.
There is, Kalila, never a direct drive connection instantaneously between what's happening in the business and what is happening in the stock market. Sometimes the business leads the stock, other times the reverse is true. But if you think about it, why did the stock go from 220 to 65? It certainly wasn't based on the earnings going from 220 to 65. that would be 140. That would be like 70% down, right? It certainly wouldn't be, the stock wouldn't have been following the earnings, because our earnings certainly were not down by 70%. It was a matter of, we have not had dividends for nearly 3 years, and people had to eat. So they were selling stocks when no one was buying. And the stock price at any point in time is simply a function of how many people are buying on that day, or that week, or that month, versus how many people are selling. So the stock price usually is not a reflection of the value of the business. So yes, I'm disappointed, but the metaphor is, we are watching the playing field primarily, and doing what we have to do to make sure that we continue to build a business that is efficient, the governance is strong, and our customer service is par excellence, while at the same time ferreting out new growth opportunities for the future. So yes, it's disappointing, but we focus on the business itself,
Yeah.
which we can have some degree of control over, Kalila. The stock price, it will do whatever it wants to do. We don't control that. We control what the business, how efficient the business is, and the customer service we give, and unearthing new opportunities.
At the same time, you do want this APO to sell. You want people to buy into this NCB APO. And if, as you mentioned, the price is an indication that people are selling, does that worry you that you're not gonna hit this $5 billion target?
No, absolutely not. And I'll tell you why, Kalila. If you think about it, look at the track record that we have. When I first became involved with NCB in 2002, the share price was $2.20. 17 years later, the share price was $220. That's 100 times in 17 years. By any stretch of the imagination, that is a fantastic track record. We know what it took to have done that. And what it took to have done that, we're now doing again. For those of us who have confidence in the management, which you see on the screen here, except for Mr. Bowen, for those of us who can see that there is a stark difference in behavior between since July the 17th, where more you see NCB is in the field. The noise that was prevalent then has been tamped down. We have paid a dividend. This is now we are now going to be we have paid 2 dividends so far, and the quarter's end is coming up. We are when we report in early May, when we report earnings. So from the business standpoint, we're doing what has to be done, and what will eventually drive value and ultimately stock price. So now is a great time to get on board, because look at the track record from $2.40 to 220. So we know what we have to do to drive value, and we're absolutely doing it. I'm 73. I don't have too much time. I'm frenetic, okay? All right?
So, Robert, your
So
boss said that you guys are doing what needs to be done. You know what needs to be done to drive value. What is that? What are the things you're doing now to drive that value for shareholders and for customers?
If we break this down into a couple of different perspectives, I'm just going to go back a little bit to what we've done over the last about 8 months. So when we started the reset in July of last year, since then we've reduced expenses. So one of the issues was efficiency, expense ratio. So we reduced expenses by about $8 billion a year. And again, these are all things that have happened. We have reconfigured the boards of directors to do 2 things simultaneously, not a trade-off. We want more alignment across the group, so we have more harmony. We also want more independence in each of the respective companies, so we get that tension that you really want. And so we've reconfigured the boards to increase the independence of the boards while also increasing the harmony. The third thing we've done is we moved up $15 billion of capital that we reallocated within the group. So in addition to the $8 billion of expense reduction, we have started to reduce our debt. We announced the divestment of NCB Cayman. And on the customer experience side, where we were getting customer complaints, we put a big focus on improving service levels at the ABMs. We have about almost 40% of the ABMs in the Jamaican market. And so our service levels, our ABMs are effectively the network. And secondly, our service level is the service level that people experience. Christmas was a great example of how the improvements we made since July, because Christmas went off without a hitch. In addition to the ABMs, we also put a big focus on helping our customers not be the victims of fraud. So there's a major education push, and we've seen the fraud numbers come down. Education push, we've tweaked our product designs, we have improved the technical defense mechanisms that are there, so where we can use technology. So those are a couple of the areas on the customer focus side we've taken to the streets, as you've seen. And then looking ahead, what we're doing is we're staying focused again on the customer, but trying to do three things, Kalila. Firstly, leverage our scale. We are the biggest by a long shot. And so we want to capitalize on that scale to create efficiency. That's number one. The second thing we're doing is we're leveraging on our scope. We are also the entity which at scale has banking, has insurance, does mortgages, credit cards, capital markets, wealth management, pensions, all of these things that customers need, corporates need. And we're bringing all of that together in a convenient one-stop shop. So that's the second area of focus for growth. And the third is actually leveraging what is our internal DNA, which is wealth creation, and matching that to the fact that the region is in a position where it's experiencing growth. And so when we combine our wealth creation DNA together with the region's positioning for growth right now in pretty well all the markets of the Caribbean, that combination, we can turbocharge the growth of the region and also grow our wealth management business. So those are the things we're doing we've done and we're doing to dramatically to create outsized profit growth.
So let's talk about the use of funds from this APO and the other strategies you're using, because we spoke about the bond. So in total, it's like $11 billion that you're seeking to raise, 5 here from the APO, 5.5 from the bond, with an opportunity to possibly upsize. I'm looking at the prospectus where it says use of funds. Reading from it, it says the company intends to use the net proceeds from the invitation to support a part of our deliberate plan to reallocate capital with a focus on reducing debt and bolstering the capital in the NCB Financial Group. I'd like somebody to explain what that means. We understand the reducing debt part, but what do you mean by reallocating capital?
So like I started off, we're a very big group, right? And so we have capital spread across 20 plus countries in many different business lines and product lines. And so one of the things we need to do from a capital efficiency perspective is make sure that capital is allocated and put to work in places where it earns the highest returns. And sometimes the highest return is achieved by actually reducing your debt. Sometimes the cost of debt is lower than the return you can achieve. And other times, by reducing your debt, you can increase the total return on capital in the business. So that's what I meant by we reallocated right at the beginning $15 billion of capital within the business so that we could actually use it to increase the overall, reduce some debt. We used it across the group to make sure that we're increasing the overall return on capital. The other thing that I'd like to put into context, Kalila, is this is a $5 billion about APO. And you talk about us being in the market with about a $5 billion bond. The bond is effectively a refinance, so it's not an incremental source of capital for us. It's a refinance. But what's not to get lost is that we earn about $25 billion a year. So while the focus is on what are you going to use the money from the APO to do, if we use the money from the APO to reduce some debt, what it does is it frees up the other $25 billion that we earn to invest in growth. And that's actually more money that'll be reinvested in growth than the amount of the APO.
I see. So it also says bolstering the capital in the NCB Financial Group. Is that because of Basel III, that requirement that you have to have more capital on hand?
At NCBJ in the bank and in the insurance companies, we've strengthened the actual regulatory capital within those entities, and that's across the board. We strengthened increase over the last few years. We've increased capital in all the regulated in the actual operating companies. And so that's, for the most part, that's behind us, Kalila. When we talk about bolstering capital, it's about reducing debt, increasing our overall liquidity, increasing our resilience, building some more buffers so that we actually have more financial flexibility, that we can be more opportunistic and make sure that, again, that we're maximizing on our taking advantage of the growth opportunities that we see, but not doing them at the expense of dividends or by funding them with debt. So in this way, what we're doing is we're increasing our financial flexibility. We're making sure we keep our dividend payments going, and at the same time, we are actually investing in growth. So when we use the word bolster, probably a bit of a misnomer, because it's about strengthening our financial flexibility, not so much increasing our capital levels, because we've been doing that for the last 3 years.
What growth opportunities do you see?
Our organic business is the biggest growth opportunity we have. So need to think about, again, the number of countries in which we are, and the number of the breadth of our product range. Most of our customers so for example, we're very big in banking in Jamaica. We're very big in insurance in Trinidad. We're in capital markets across the region. Guyana is growing. A business doesn't go out there saying, boy, I'd really like to spend all my time figuring out how to meet my financial needs. They want to focus their time on how to grow their business. Our opportunity is to say, we can take care of all of your financial needs. We can take care of your banking, your payments, how do you collect from your customers, how you pay your suppliers, your auto insurance, your property insurance, your casualty insurance, your pensions. All your employees need personal retirement plans. We can do all of that. And when you take a look at the depth of us, our breadth across the region, the breadth of our product array, we have enormous growth opportunities within our core, what you would call our core organic business, because the depth and breadth of this business is so great.
Michael, what's your vision for NCB in the next 5 to 10 years?
The vision is, firstly, we're the people's bank, right? So let's talk about the responsibility as the people's bank. It has always been my ambition that I want to make sure, just like that Roxroy car video, I don't know if you saw the Roxroy car video. Well, there was an article in the Observer in December. It was entitled, "The Sky is the Limit." When I bought the bank in 2002, I immediately that day left and went down to Half Moon. When I got there, the plumbing wasn't working in the villa. And I met this gentleman, the plumber, the maintenance guy, who fixed it. So I started talking to him about his own situation, his aspirations, etc. Anyway, he took me seriously, and he started investing. He started investing then. So when I came back to Jamaica, I would touch base with him just to give him some encouragement. The long and short of it, that man is now an entrepreneur, a very successful business person who is doing well and also doing good for his community. So what has happened to this gentleman? And it's cataloged in the Observer under the heading "The Sky is the Limit." What has happened to this gentleman? He has been given an opportunity through entrepreneurialism and through investing to take himself and his family into a more than a middle class life. So my goal, what I would love to see happen is my compatriot Jamaican people, my compatriot Caribbean people become better owners of assets, because that's how you become wealthy, by owning assets. This opportunity here is an opportunity for every, in this case Jamaican, because it's only being issued in Jamaican, to be able to buy shares in an entity, NCB, that represents the growth, the future of Jamaica. And for $6,500, you can participate. Where else can you participating in the growth of a company for so little funds? $42 US, by the way. You can't take $42 US and buy real estate, but you can buy shares in a company like NCB that has the breadth that Mr. Almeida just mentioned, the scope, and you're totally aligned with us. 50% of NCB I still own. So therefore, the invitation is come invest right beside me, and we're totally aligned. So whatever I do, you get the benefit of. So the vision is to use this as an opportunity to activate Jamaicans to become better investors. So I would love to see 3 million Jamaicans invest even in a if you were to say to me, Mike, would you rather have someone write a check for 5 billion, or would you rather have 3 million Jamaican write $6,500 in checks? I would say I'd rather have $6,500 in checks being written by 3 million Jamaicans, and that experience will put my fellow man, countryman, on the path to creating wealth once they get a taste of what ownership is all about.
I agree with that philosophy 100%. That's a philosophy I can definitely co-sign. So, Robert, I just want to wrap up on the use of funds portion of this discussion. So, we spoke about reallocating capital, we spoke about bolstering capital in NCBFG, and we spoke about reducing debt. Can you tell us more about the reducing debt portion? Like, is there something specific, a specific debt that's going to be reduced with the use of these funds?
No, like I said, just like our refinance that we're doing right now for the $5 billion, we have debt that comes due on a recurring basis. So there isn't a specific year marked for this $5 billion. It's just $5 billion that'll go down towards our debt repayment, Kalila. So, but it would happen pretty instantly. So it's not like something that we would take in the money and hold on to it for a while we're waiting for figuring out where we wanted to deploy it. We would deploy it to reduce debt that comes due on a regular basis for us. If I can, Khalil, I'd just like to take you to one thing before I let you go. One of the things that I always find it's not intuitive for people to think about when you're thinking about profit growth. We talk about our expense ratio, and most people have a hard time thinking about percentages and ratios. It's not intuitive. When we have an 80% expense ratio, that means that we have a 20% profit margin. If we can take that expense ratio from 80% down to 60%, that means that the 20% profit margin goes to 40% profit margin. And what that means is that profit doubles just on our focus on efficiency. And so just not to make light of where growth comes from the compounding of taking that expense ratio down from 80% to 60 and below, while at the same time riding the tailwinds of the regional growth that exists, and combining that with a growth of our product line, particularly on the pensions and wealth management side. And so combining top line growth with an efficiency improvement, when you put that together, that's where you get the really outsized growth, and you're not talking single double digits of growth, you're talking into the triple digit type range.
Now, most people, when they hear a big company is seeking to cut expenses, you want to bring that expense ratio down that drastically. Most people are going to think, oh, that means service is going to fall, and you already have complaints about customer service at NCB. How are you going to bring that expense ratio down that much without affecting quality customer service?
So the numbers are always big, Kalila. That's the hard thing, I think, when people think about NCB. We took out $8 billion of expenses without really touching anything that affects the customer. So that's the starting point. The second is a small amount of growth while maintaining our expenses means that our expense ratio goes down. So just by growing the top line and not growing the expense base, that's what we mean by realizing on our scale benefit. We have the scale to keep growing the top line without growing the expense line. And when we do that, that expense ratio goes down. So it's not a cost-cutting exercise that removes customer service. If anything, our focus on customer experience is by making sure there's better service quality, there's more ATMs, there's more service at the customer level. The focus we're doing is making sure that we retool our head office and our back office to make sure that it realizes on our economies of scale, gets us down to what would be world-class type or world benchmark level of 60% expense ratio, and keep growing the top line, be brilliant at the basics, which means make less mistakes. It costs less money if you don't make mistakes. And at the same time, add true value to the clients by helping them create wealth, increasing the amount of wealth creation solutions we bring for them.
So let's bring Ian in here. Ian, you've probably been feeling lonely and left out of the conversation, but I did promise we would come to Guardian Holdings. Just a reminder for our viewers, Ian Chinapu is the Group CEO of Guardian Holdings. So Ian, what opportunities do you see in the insurance industry right now for Guardian Holdings?
The Guardian Holdings is the parent entity of a multifaceted, multi-line insurance and asset management service company, right? So we call ourselves the Guardian Group. And we're the leaders in the insurance sector across many lines of business, including life, health, pensions, property, casualty, marine, motor, many others. And we are connected through the globe via our experience and wide-reaching reinsurance network. And we recognize and incorporate all of those impacts of the trends, in population, demographics, for example, health, climate change. All these things are in our product development and our risk analytic models. So to answer your question about opportunities in the insurance sector, in 2023, we established our product factory. It's up and running, and the goal is to design and develop new products to embrace all changes as we seek to maintain and grow our market share and further preserve our strong profitability into the future. On average, across the region, we're in the 30-35% market share. It varies in different markets. For example, we're over 60% of the market in the Dutch Antilles, Dutch Caribbean, and we're in the 30% in Trinidad and Tobago, 35%, and in the teens and lower in the Eastern Caribbean, which we intend to grow. So we see opportunities in our geographic space to grow our product set into markets where we have a low penetration and also into other regions. So we're now, as of 2023, we have our insurance company registered in the Netherlands. We've been doing business there since 2011. And we now have over $4.3 billion equivalent in cover in property and casualty products in the Netherlands, in Europe. So we have in place our 10-year strategic aspirations. We developed it last year in 2023, and that's driven by our commitment to create value for our shareholders, as evidenced by our ability to drive our key metrics that create long-term sustainable performance. For example, earnings per share, customer experience metrics, very much in line with our ECG, employee engagement, which drives our customer experience as well, and of course, share price growth, because Guardian Holdings is a listed company on the Trinidad and Tobago Stock Exchange as well as the Jamaican Stock Exchange, just like our parent, our majority parent, NCB Financial Group. So underpinning our future state is our ability to achieve those capability building strategies. And what we'll be doing in order to get there, as I mentioned, we've developed our product factory, and that creates a continuous pipeline of product development across all our multi-lines of business across the insurance, wealth management, asset management. And that is, of course, to meet the evolving needs of our customer. And then we have revamped our investment management and governance framework. And that, of course, is the G in the ECG, and that actively manages our significant investment portfolios to ensure we are able to pivot seamlessly towards optimal investment opportunities. I haven't converted it to Jamaican. I should have done that, but we have close to $20 billion in insurance funds under management and over $30 billion overall when you count our trust companies and our mutual funds, etc. So, of course, we remain within our regulatory framework. We're regulated for most of our entities, but we ensure that we're preparing for an economy with unpredictable business cycles and markets. That's why we have to be focused on governance, especially investment management governance. And then, of
No,
course,
as you mentioned that you hadn't converted into Jamaican dollars, one of the issues with investing in Guardian specifically has been, well, at least the perception is there that you're gonna have trouble getting your money out of Trinidad and Tobago because of the
not
foreign
at all.
exchange constraints in that country.
Well, Jamaican investors can invest on the Jamaican Stock Exchange. And of course, we pay our dividends in Jamaica in Jamaican dollars. So there's active trading in Jamaica as well for Guardian Holdings.
But how does it work for NCB being your parent when NCB needs to collect its dividends from Guardian?
Guardian pays our shareholders who are based in Jamaica or in Jamaican dollars. So you don't have to get TT dollars that you have to convert. So there's our Trinidad and Tobago investors get in Trinidad and Tobago dollars, and our Jamaican investors get in Jamaican dollars.
Which includes your parent company, NCB.
Naturally.
Sorry, Khalil, if I can just add on to that, you asked the question
Sure.
before about reallocation of capital. So it's important to recognize, as Ian mentioned, the Dutch Caribbean, but a number of the markets in which Guardian operates are actually, hard currency markets.
Hard currency based. I was just about to add that, yeah.
Yes.
We actually are a net US dollar earner, Kalila, at the Guardian Group. So while 40% of our assets are in Trinidad and Tobago, close to 60% of our profits are outside Trinidad and Tobago.
For Guardian or for NCBFG?
For Guardian.
Oh.
For Guardian is in 22 countries, 21 in the Caribbean, and the Netherlands and Europe. So while we're the largest insurer in Trinidad and Tobago, we're also the largest insurer in the Dutch Caribbean. We're in top 2 in Jamaica. We're the largest insurer in many of the markets that we operate in. So we actually are a net hard currency earner, whether it's euros, US, etc.
So you should have no trouble meeting those currency.
We've never had trouble meeting our dividends. So in fact, of our $4 billion in dividends we paid in 2023, 2.5 billion, this is Jamaican, 2.5 billion was paid to the NCBFG from the Guardian Group.
Sometimes we use the word like reallocation and people don't know what it means. In a group like ours, one of the things we have to master is we have to become masters of moving capital around. And that this is somewhere where you can actually see it as Ian talks about. Guardian is a net hard currency earner. And we then have to turn around and figure out how do we make sure we deploy this capital from these different businesses in Jamaica, in Trinidad, in the Netherlands, in the Dutch Caribbean, in Bermuda, and manage that reallocation. So the word reallocation may sound like an abstract term. I just wanted to stress that what you just heard is where it becomes less abstract and more tangible.
So Ian, how do you see Guardian further integrating within the NCB group?
Listen, this is an amazing group we have. There's nothing like this in the Caribbean. There's no group or business construct in the financial landscape at present like NCBFG, which includes Guardian Holdings as a 61.7% a majority shareholder. We are the combination of the largest bank by multiples in Jamaica and the largest insurance company in the Caribbean. So for your financial and risk protection needs, our reach and capabilities are unparalleled. So as we align our strategies and we capitalize on our financial strengths, our market reach, our product diversity, our talent, amazing talent we have across the Caribbean and even outside the Caribbean into the Netherlands, there exist synergies in cost management, Kalila. There's technological investments that we can capitalize on. There's talent enablement across the group. We can leverage our talent. And of course, we can develop products like no one else can. And that will result in significant benefits to both companies, of course, to our customers. Of course, it will excite our employees to be able to be at the cutting edge of what we can offer, and by extension, our shareholders. So we are really excited about making these possibilities ultimately our shareholders and our customers' everyday reality. So there's nothing like us in the financial landscape. And we need to really, as we go forward, capitalize on that and bring technology, cost management, our talent, our people, our product innovation to the market. And that's our intent. We're going to be doing that.
All right. Well, before we go, let me give each of you an opportunity to tell our viewers why should they invest in NCB's APO. Michael Leachin, I'll start with you.
Well, NCB is the people's bank. Therefore, the people should own NCB, especially as Mr. Almeida said earlier, every citizen in Jamaica is touched by NCB, whether it's through your payroll, your life insurance, your loans, your usage of the ABM machine, the POS machine, etc. So you use the services of NCB. It's the People's Bank, and as I said, if it's the People's Bank, you're using our services, you should own it. There's a saying that goes like this: if you buy the milk, you should own the cow. That's what we're right. So I invite every citizen to come join me in creating a lot of wealth through this wonderful opportunity we have called NCB Financial Group, and it's on all its glory because we are going to make sure that it becomes the shining house on the hill that it deserves to be. So if you have confidence that we can do that, come join us.
Robert?
Kalila, a financial company, the financial system is a mirror image of the economy. And so we find ourselves at the intersection of two forces right now. One is the Caribbean is at a really, really good place. Jamaica's in a very good position. You just have to drive around and see all the construction, see all the growth that's taking place in Jamaica. Trinidad, the oil industry and the oil and gas industry are going through a renaissance, while Guyana, with its growth over there with the oil discovery and the growth taking place in Guyana. So the region is going through growth. At the same time, that would just on its own, that would be good for NCB. But NCB's got the extra piece that, having just had a little bit of a hiccup over the last couple of years, we're actually now going from an inefficiency to efficiency transition. That double intersection of growth in the region, growth in the market, and we're the number one financial service provider, combined with an inefficiency transformation taking place within our group, that is a unique opportunity that dovetails into what Mr. Leachin just said, which is it provides a great point of entry in order. So if you buy the milk, you should own the cow. And right now, the APO share price provides a very good, attractive price at which to come in and own a piece of the cow.
And Ian?
Not much more to say, but we are both of this region, born and bred. NCB Financial Group, Guardian Holdings, this is your company. We are for all. As Mr. Leachin said, we are the people's institution. And now is a great time. You're not going to get a better time to buy low and hold until it's high. And you may not ever want to sell this, but now is the time. The old adage, buy low, sell high. This is that time. And you know what we can do. Everybody touches our products. We are here for you for the long term. We are long-term capital aggregators. And this is what our people should be looking at. This is your institution. Now is the time. And in fact, my only regret is that there are not more shares that people can participate in. But as we go and grow, you'll benefit tremendously.
All right. Thank you so much for joining us, Michael Leachin, Ian Jinapu, and Robert Almeida from NCB and the Guardian Group. Thank you so much, gentlemen, for joining us.
Thank you very much.
Bye, Kalila.
Thank you.
So if you're interested in the NCB APO, all you have to do is go to goipo.jncb.com. The link is right there in the description, and you can submit your application. And you can also pre-apply if you're watching this before it actually officially opens on May 6th. If you want more information and you want to read the entire prospectus, which I always advise, click the link in the description as well. We've linked the prospectus right there so you can open up that document, read it for yourself, and make up your mind for yourself. And of course, I'm Kalila Reynolds. Until next time, let's get this money.
Let's get this money.